Welcome to the Safe Wheel live stream where I share my real account on 3 accounts and teach my proprietary Safe Wheel options trading system for free. And let's get started today. Let's see here. I want to make sure you guys can hear me. Let me look at the comments here. Type in the chat that you can hear me okay. And also be sure to post any questions you might have before I end the broadcast. I want to make sure I get to all your questions about options trading or about the Safe Wheel. And I want to get to those. Okay, sounds good. Thank you, Walter, Will, Joseph, and some guy. Thank you. Okay, good. All right, let me get started here with the earnings edge. So what happened last week with the earnings edge? We traded Microsoft. Microsoft turned out pretty good. Made about $1,100. This, you can see I've done well with Microsoft this year. I think I've got a couple wins with Microsoft so far. And let me bring over the spreadsheet here. So with the earnings edge, Microsoft made about $1,100. Record 33.19 and 6. Record is 12, 11, and 3 since inception. And I think these records are these numbers are a little bit off. I didn't have time to kind of update them. They're a little bit low here. My average win and average loss, but they're definitely, close. So, average win close to $900, average loss around 450. So the earnings edge is doing quite well. You can see 2022 returns versus the S&P, 63%. You can see so far year to date. Let's see, what is my P&L? 97.58. Let me put that in there. 97.58. What is the S&P? What is SPY trading for? SPY is 453.97. 453.97. So you can see the S&P is up 18%. Wow, the S&P is doing, or the S&P 500 is doing quite well this year, up 18, almost 19%. The earnings edge is up about 19%. You can see overall, though, since the inception, which was January 2022, the S&P is still down 4.4% since January 2022. You can see we're up 95% here with the earnings edge, vastly outperforming. Of course, we've got a lot more volatility with the earnings edge also. Okay, that is the earnings edge. Let's talk about the Premier Level 5. What's going on with that? So if I go here, come into the Premier Level 5. You see our 34,937, 34,937. Let's see what that looks like. 34,937. You can see there's not a lot of volatility with this. Started this on April 8th, 2022. Outperformed the S&P here, 12% minus 6. So far this year, not outperforming, almost 4% versus 18. You can see that we're probably at about 1/4, 1/5 the amount of volatility. So you can multiply this by 4 or 5. You're still underperforming slightly on a risk-adjusted basis. But when you look at the total since inception, up 16.5% versus 11, still outperforming the S&P since I started trading this live with real money. And of course, I've got about 1/4 the drawdown. So on a risk-adjusted basis, vastly outperforming with the Premier Level 5. Okay, so you can see my P&L. All right, let's go to the Safe Wheel. I'm trading DraftKings. I can see here just by looking at this, I don't own any shares. So whatever I did last week, which was sell a put, I did not get assigned. All right. Now I started trading the long calls on Fridays. So this long call is already set. I did this last Friday. So I got out of my long call that was expiring on last Friday, and I opened a new one that expires this Friday. So the long call, I don't need to trade today. And I have my put hedge left. And so I need to see if this put hedge is still viable. And I have two questions for that. One, is it under 100 days left in the trade? And the answer is no, so that's good. And then second question is the strike close enough to the actual price to be within 70%? Let me see here. I'm going to just use my calculator. So 3113 times 0.7 is 2122. So it's got to be above 22. You can see it's 25. So my put hedge is good. I don't need to make any changes to it. So the next thing I'm going to do is just kind of basically run the traditional wheel at this point. And I'm going to use the expiration cycle here of the closest expiration cycle. I like to run this cycle because things expire at the end of the week. So it kind of gets down to the brass tacks. So I'm going to be looking for a put that's out of the money that gives me at least 31 cents. So these puts, this $31 is out of the money. This 30.50 is out of the money, and it still gives me 31 cents. I'm going to take this one. I could use this one if I wanted. What I like to do is typically use a little further out of the money if I can, because it gives me a little more cushion and a little more leeway towards my put hedge. So I'm going to sell this one. I'm going to do one. So I have between $6,000 and $10,000. So I'm going to do one of these and 3 put hedges. So since the mid price is 42, 41, let's see if I can get 40. Okay, I got $42 for it, looks like. So I just collected $42 in premium. And that should outweigh how much my put hedge depreciates, because this is further out in time. All right, so let me make sure I got everything on the safe wheel. Looks like I have everything ready to go. I got the put, got this. Yep. Let's look at the safe wheel results. You can see I've got $6,334 in there. $6,334, right? So you can see the safe wheel did 21.7%. I started this in January 2022, vastly outperforming the S&P 500, which was down about 20%. This year to date, up 4% versus 18, so underperforming here. Drawdowns on this so far this year are about half the amount of drawdowns on the S&P 500. The drawdowns, I was rerunning a few back tests here, and I noticed the drawdowns on this are historically better than the S&P, but not by a lot. So when you look at the actual returns, the risk-adjusted returns are very similar. So you really have to compare the actual returns. It's a pretty fair comparison. So from the inception of this trade, I'm up 26.68% versus the S&P is down 4.4. So outperforming vastly on a risk-adjusted basis and just on a percentage basis. All right. So that should be it for the safe wheel, I believe. I'm going to go into... Oh, do me a favor right now and just reach over there with your mouse and hit that like button. That'll help out quite a bit. Quite a bit. All right, let me get into any questions I have here. What software do you use for your live streams and video editing? I use YardStream for my live streams, and I use Camtasia for my video editing. Okay, you guys said that you can hear me okay. Good morning, Kevin. Let's see here. MRC. Question, wow, trading Safewheel Live. Have you ever had to sell your put hedge? I think I have. I think I did with Macy's. You guys would probably remember better than I would. I, I don't I don't remember, to be honest with you. I think I have. Oh, one thing that kind of came to mind right now. If you guys have ever, if you're making money with this system, please leave a comment in the video, because I've had a guy the other day saying that nobody makes money with the system and I'm the only one making money. And not only that, but everything I'm saying here is made up and not true. So not only am I supposedly lying about my P&L and making money with this system, but nobody else is making money with this system. So please leave a comment. Let the guy know, hey, if there's anybody making money with it, let me know. Let the guy know. Well, should we spend a little more than $5 on the call if we're buying it Friday? I'm not doing that. I'm still have the $6 topped out rule. Trying to get it for $5. We'll pay 4 if I can't get it for 5 or 6. Salvatore, you do a percentage out of the money as a target for the put hedge. Yes. The percent of the strike price captured in the premium for the short. Percent of the strike price in premium. No, I'm not doing it based on the premium. I'm doing it based on the strike price itself. So the strike price itself versus the price of the underlying. And the $5 long call, shouldn't these all be standardized to one metric, delta? Yeah, so they are standardized to one metric, which is percentages. So yeah, it's all based on percentages, not deltas. I don't look at deltas or any Greeks when I trade the safely. Will, what do you think about doing the safe wheel Fridays afternoon instead of Mondays? Yeah, so the problem with that is I need to let my, for example, this put right here that I sold, I need to let that fully either get me assigned or expire worthless. So I can't trade on Fridays because then I would have to roll it or buy it back. Salvatore, I think he wanted to do that at one point, but he mentioned that the unknown of the assignment. Yeah. Yep. That's what I just said. It was good. Let's see. Less is more. For larger accounts, would it be riskier to take on a second equity using the wheel or adding more tranches? That's unknown. I mean, sometimes it would work out taking on a second underlying, and sometimes it would work out staying with the same underlying. And I don't think that even if you back tested it, it would give you any kind of definitive answer. It's kind of a 50-50 in my opinion. And I think that even back testing it doesn't necessarily, I don't know what the word is. There should be a word for this, but there's certain situations that if you back test it, it's not really going to matter. And I think that's one of the situations, if that makes sense. Walter, when your put hedge is more than good, any value in rolling it down? No, I want to keep it. So when we put on a second tier, we're getting closer to that put hedge. And I want to keep that put hedge as strong as possible because the system's designed for it to do its job once the stock starts going down and starts getting closer to it. And so I wouldn't want to weaken it, if that makes sense. Well, I'm taking a spend of $2 to $3 more on rolling up my call. It's lost half its value since Friday. Let's see, my call is at $7. So wait, Mark, no, $3. Yeah, it has lost half its value. Well, the call's just there just in case there's some crazy run up. I mean, I'd say 95% of the time, the call doesn't do anything. It just expires worthless. And it's just there for those extreme cases. So I wouldn't be I'm not concerned about this, about about my call only being worth, 3.5 cents today. I'm not concerned about it. Charles says yes, he's making money with the safe whale. Appreciate that, Charles. Salvatore, is this short delta to start? And does it gain delta as you get assigned shares? Let me think about that. Yeah, definitely. For short delta with this system right now. I'd have to look at, let's see here, analyze. If we're looking at the whole system here, we've got some delta. Where is it? Yeah, we are short delta here, but once we get assigned, we're going to be long 100 shares. We should be pretty long delta at that point. I'd have to check the deltas and everything, but because it's got to come up against the delta of the, let's see, this one here. Yeah, so we're short 60 delta here, but if we're turn around and we're long 100 shares, we're going to definitely be long delta at that point because it's going to overcome the delta of the put hedge. And Neil says that he spent $7 last Friday and he's just sharing that. Will, I've made 14% on the safe wheel since I started last summer, 3% year to date. Any amount differences are because of my mistake or experimenting. Thank you, Will. And Walter, any value to rolling part of the put hedge down and collecting some premium differential? I don't know. I'd have to back test that, and sometimes it would probably help, and sometimes it wouldn't. I would not, because it seems like it's going to complicate the system. So I'll probably stay away from doing that, but you can always back test that. Let's see. Let me make sure I've got everything here. Okay, I don't see any more questions or comments. I do want to say there might be some changes coming up with my live streams, but you'll definitely let everybody know what's going on as time goes by. Okay, so here's a couple more questions here. Let's see. Less is more. Are there any issues for the wheel in considering ADRs that have weekly options? You mean like the range? Like you're using the average range, the ADR? Is that what you mean by that? Are there any issues? I don't know. Is there any issues with JD? JD. Let's see what it looks like. Let's see here. JD. JD looks pretty good. The liquidity is good. You got enough, definitely have enough premium. I don't see any reason why you would not use this stock. There's a couple other filters, but I won't get into those right now. But it looks promising. Unless there's some earnings coming up. There might be earnings this week. I wouldn't open it, when earnings are just coming up, but yeah. Okay, Salvador, I've looked at some scenarios. When assigned the first 100 shares, it tends to be delta neutral. You do gain 100 delta with the shares, but your put hedge gets more negative. Oh, okay, yeah. So you are closer to the put hedge. So the delta in the put hedge has more negative deltas to kind of counteract the 100 shares. That makes sense. Less is more. So you're talking about considering them as a candidate. So let me see what your question was. Issues. Consider ADRs. So that a certain type of stock, ADR. I'm not sure what you mean by ADR, so I can't really answer that. So maybe give you a second here to explain what that means. But I think JD looks pretty good as a potential underlying. What's it trading at? 37. Okay, so I'm not sure how long it takes for when you guys post a question, how long it takes to show up on the feed. Let's see. American depository receipts. I don't use that as any kind of filter at all. So I don't even deal with that at all. So I'm not sure why that would be significant or not significant. As long as I have a stock that fits my filter criteria, then I'll use it. Oh, it's a foreign company. Okay. Yeah, so that wouldn't bother me at all. As long as I have as long as it fits through all the filters, I'd use it. I don't it doesn't matter whether it's foreign or not. Okay. So I don't see, let's see, some guy, let's see, I before E except after C. Yeah, I can't spell. If somebody misspelled something, don't worry because I can't spell either. So, okay, guys. Yeah, it looks like it's foreign depository, foreign stock. All right. Yeah, I don't, that doesn't ring a bell for me at all. Some of you guys are probably from out of the country, so it rings a bell for you pretty quickly. Uh, doesn't ring a bell, but now I know what you're talking about. All right. Well, I'm going to get ready to end the broadcast here. I don't see any more questions. And one thing I always like to say, if the P&L is not real, what else are they trying to conceal? We'll see you guys next week.